Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories for the week ended May 21st, 2017. Fed President, gold irrelevant to monetary policy. San Francisco Fed President tells high school students in San Francisco that the dollar is king. We saw renewed Treasury buying by the Chinese and Russians in the latest TIC report issued by the U.S. Treasury. We're going to talk about that. Platinum deficit projected by the World Platinum Investment Council. Deutsche Bank was charged with being an international criminal organization. Surprise, surprise. COMEX Bitcoin futures market might be coming soon. One Belt, One Road update. And former FBI Director James Comey is at the center of attention again. Let's get to the week's stories. Just before we start, a reminder that you can consider and you can actually donate to Smaulgld via PayPal or via Bitcoin or by becoming a patron via Patreon at the links below this YouTube and also on the website. Please remember to subscribe to the website by filling in your name, not your name, just your email address at the top. All right, let's take a look at the stories. So the top story, before we get into some of the other headlines, I want to talk about the Comey controversy that's going on because this directly plays into political turmoil and the potential price of gold and silver. So this 3-month-old Comey memo surfaced last week, and it was read by a, quote, Comey associate over the phone to the New York Times, who then published it. Now, the memo supposedly reveals that Donald Trump tried to dissuade then FBI Director Comey from pursuing the Russian case, which the media is now saying this is an obstruction of justice and Trump should be removed from office, should be impeached, and so on. Now, there's a few issues with this whole kind of, I would think, invented narrative. First of all, no one's seen the memo. The memo is hearsay. We don't know the context of the discussions between Trump and Comey. And we don't even know who the Comey associate is. And by the way, if there was classified information in that memo, the fact that a Comey associate, who's probably still working at the FBI or someone who's friendly with Comey, has then committed a crime by providing this information to the FBI. Either that person works at the FBI and came about it in the normal course of his business, or Comey himself gave it to somebody who's not in the FBI, and then therefore Comey would have committed some type of breach of responsibility of handling classified information. So we don't know. Now, the other thing is, this memo is 3 months old. So if indeed the memo is true, and Comey is going to testify next week about this, then Comey would have had knowledge of a commission of a crime, the obstruction of justice, and there is a federal statute called misprision of felony. Whoever has knowledge of actual commission of a felony recognized by a court of the United States and conceals and does not as soon as possible make that known to some judge or other person in civil or military authority of the United States shall be fined under this title or imprisoned not more than 3 years or both. So if Comey knew about this and was actually told by Trump to back off, and that Trump was trying to obstruct justice back in February, well, Comey did not, quote, as soon as possible report that to a judge or some other person in the civil or military authority in the United States. Having an associate of his call up the New York Times and report it is not quite the same thing. So if indeed that had happened, then Comey would be potentially liable under that statute for not relaying this information of the potential commission of a felony by Donald Trump, who was trying to obstruct justice. To make matters worse, it was also revealed, and the media made a big deal out of this, but there is a bit of a wiggle room for Comey, that when Comey was interviewed in Congress a month after the supposed obstruction of justice statements by Donald Trump took place in February, in March, he spoke, no, it was May 3rd. It was May 3rd, not March. He spoke to Congress just a couple of weeks ago and said that the administration never pressured the FBI to halt an investigation, and that if it had done so, it would be a big deal. Now, many in the media said, well, that proves that Donald Trump did not try to obstruct justice. Well, Comey's slick. That's not the question they asked him. They didn't ask, did Donald Trump try to obstruct justice? They said, did the Trump administration or the Justice Department try to obstruct justice? And he emphatically stated, no, they did not. They didn't ask him, did Donald Trump himself? But he still has that issue about himself, because if Donald Trump himself did try to obstruct justice, then Comey was obligated under that federal statute I mentioned to have reported it, and he didn't seem to do it. So what we have going on here is a coordinated attempt by, it seems, Comey and the media, New York Times, Washington Post, it always goes to those two, one of those two, to try to undermine Donald Trump. You know, they haven't gotten him on the Russian collusion. They say there's no evidence. So now they're going to say, well, he's trying to obstruct justice in that particular case. Later in the week, it was revealed Trump called Comey a nut job in his meeting when he was talking to the Russians. So now the mainstream media is talking about impeachment. This all is clearly a circus, and maybe it's designed to be a circus to create the perception that Trump is a bumbling idiot and that he needs to go because he's under this cloud of Russian suspicion, and he's just popping off, and there's a lot of leaks, and basically it creates an impression that Trump is not fit to be president and was illegitimately elected. Now, if that indeed is the perception they're trying to portray, whether it's indeed factually correct or just a perception or partially true or half true, doesn't matter. That is not a good perception for the United States to have internally for confidence of its citizens, and certainly isn't confidence building for foreign allies and foes. And as a result, we've seen the dollar fall, the dollar index fall precipitously in the last month or so, from well over 100 to now about 96, 97. Again, when the dollar falls, generally corresponds with a rise in gold and silver. So let's talk about gold and silver. Gold closed last week up 2.3% at 1255.60, and silver closed up to 1683, up 2.4%. So the gold silver ratio inched down just a bit because silver rose slightly higher than gold did last week, and the gold silver ratio closed at 74.6 to 1. But you can see it's still well up in the 70s. Tweets of the week. I just noticed that one day, I think it was Wednesday, silver got hit twice. It was moving up sharply, just like gold was. You can see the two charts here, and then boom, got smacked down. It started to move back up, and then boom. And I think what this highlights is that silver is easier to throw short contracts at than gold, because it really doesn't cost much to do. I mean, if gold is 75 times more expensive than silver, well, do the math. You need to throw probably 75 times the amount less at silver in shorts to kind of get the impact that you want. But nonetheless, silver did manage to push ahead in during the week and actually outperformed slightly gold, even though gold did not undergo any of these types of smash downs like silver did. So silver has an uphill battle. You know, it starts to ratchet high, and you can see it can go straight down when they want to throw paper at it. Another thing that happened was, you know, we've been hearing about the death of the petrodollar, dollar collapse, game over, dumping of treasuries, gold to the moon, and so on. Well, Tillerson met with Saudi Arabia. If you click on this link here, you can see the press conference, and it looks like the U.S. and Saudi Arabia are big buddies, and the two individuals that were on stage, Tillerson and his Saudi counterpart, were talking about how wonderful their relationship is. So, you know, maybe it's premature to be talking about this death of the petrodollar. Now, we are going to talk about increased buying of U.S. treasuries by China, who supposedly is dumping treasuries at a mad pace, and Russia, who added a significant amount of treasuries in March. And then also we're going to talk about the Belt Road. It's a lot more complicated than just this inexorable decline of the dollar collapse. We've been hearing about it for years. There's plenty of moving parts. We're going to try to address as many of them as we can today, and then also next week I'm going to do a report on Chinese buying of U.S. Treasuries. Platinum. World Platinum Council comes out, says platinum is projected to be in deficit. Well, here's the problem with platinum. It's just like silver. It's been in deficit for years, and the price goes down. So we know that the supply-demand dynamics do not apply in pricing, because if a commodity has a deficit, it means there's, in some respect, a shortage of it. Well, then the price should reflect that. It should be higher. Instead, it's lower. By the way, if you're interested in buying platinum or gold or silver or any of the precious metals, you can do so through the Smaulgld site and through the links below this podcast, and also on the links and banners on the Smaulgld site. And if you do buy, Smaulgld gets a small commission, but you pay no more, no less than if you visited the sites directly. So if you are indeed, you've made the decision to buy gold, silver, or platinum, or maybe even palladium, it's not investment advice, but if you are going to do so, please check out your purchasing choices on the Smaulgld site and the links below, and compare pricing and shipping, and perhaps make your purchase that way. Now, gold was up, but platinum surged during the week on China's renewed infrastructure pledges. Think about it. China's going to do infrastructure, and also they're going to do the Belt and Road. There's going to be a need for platinum, silver, copper, all these commodities if they're actually going to build, you know, the Silk, not the Silk Road, well, the Silk Road, but the Belt and Road Initiative is, you're in countries either have very limited infrastructure or no infrastructure. This is a massive building project, trillions of dollars if they actually get it off the ground, and they're going to use a lot of resources. So you would think that those resources, prices would go higher, but we'll see what happens. If you're interested in platinum, there's more information here, platinum supply and demand. You can also check out the gold platinum ratio at the links that I provide on the Smaulgld website. There's full reports, charts. You could do your initial research on platinum there. Belt and Road, some stories. Now, who picks up the $1 trillion tab for the Belt and Road? Good question. Looks like China. Well, what if it fails? China's on the hook. Remember, you're going into brand new areas, Sri Lanka. You're going into places, Kazakhstan, where they have limited infrastructure. And, you know, if you build infrastructure, they will come, but do you have goods and services to transport on that infrastructure? There's kind of a chicken and egg issue here that people haven't really thought through, is you could build infrastructure, but what's it for? Now, remember, China's built ghost cities in the past, and they remain unpopulated. EU says investment deal with China urgent to support Belt and Road vision. There was a story outlining the risks. There's a couple of stories. One in, I think this one is in the South China Morning Post, talking about the risk involved in the Belt and Road, and then one in Reuters talking about cheap funds, heavy debt, and growing risk. So a lot of people are just, they hear Belt and Road, use local currencies, then they immediately jump to death of the dollar and China's hegemony. Yeah, it is not a guarantee that the Belt and Road will actually produce positive gains for either China, world commerce, or the yuan. We don't know yet. Another story, China to phase out cash. See, China is following the U.S. path of credit creation. Everyone gets excited China has gold. So what? They have gold. They also have massive credit. They're creating credit. This whole Belt and Road, the whole Chinese infrastructure projects, it's all based on credit, debt creation. They're going to use the yuan and export their inflation, just like the United States. China is not the magical silver bullet or gold bullet to end the Ponzi credit scheme. No, they're part of it, and they're probably going to be the biggest part of it going forward. And they don't want to crash the dollar. The dollar trade with the U.S. is the #2 trading partner with China. The EU is the #1 trading partner. This Belt Road thing, there's nothing to trade there yet. They're hoping to set up an economic zone there. There's political turmoil in some of those areas. It is not an economic area. A lot of people live there, but they don't have the means as of now to conduct business. Right now, China's business is in the United States and in Europe. It's not along the Silk Road. Now, China's holding of U.S. Treasuries did increase. We'll report on this next week. Ever since Trump's been elected, it looks like, and this is my theory, that Trump is cozying towards China, and perhaps the Treasury has made a deal that China needs to purchase more Treasury security, so they won't be named a currency manipulator. That's one theory. Another theory is China had lost $1 trillion in reserves over the past 18 months. They now have to increase their reserves. Well, the best reserve asset, according to central banks, are US dollars and gold. Well, they bought some more treasuries, so they're building their reserves back up that way. That's another possibility. The other reason China hasn't added any gold in 6 months, not China, but the People's Bank of China. So there could be reasons for that. The point is that the theme has changed. The theme hasn't changed, but the reality has changed in that both China and Russia, and we'll see in a bit when we get to the Russian chart, are adding U.S. treasuries to their reserves. They're not dumping them anymore, and that has changed ever since the election of Donald Trump. Whether it's causation or coincidence, I don't know. I just point that out. Gold. India is working with the World Gold Council. This isn't a good sign, to create a spot exchange in India. And it makes sense that India would have some. Everyone talks about the Shanghai Gold Exchange. China should have more say in the price of gold. Well, why not India? India is probably the #1 consumer, at least from the citizen level, of gold. Why not India? So India is working to have a spot exchange there. Story about people who found some gold while having a barbecue and they got fined. Now, here's another story here. Demonetization reduced silver demand in India. I'm not going to cover that story, but I have been covering recently that silver is not the big draw in India. It is indeed gold. We've seen that ever since demonetization has been started at the end of November, and since now things appear to be returning to normal, gold has been the go-to metal. The imports of gold are surging. Silver is not. We did a story from Smaulgld, world's first reserve currency, on the pieces of 8. You can check that out. It's a YouTube video and also a blog post. We mentioned India. Indian government gold schemes fail to attract people. It's just not a palatable thing for Indians. They don't want those bonds. They're not going to turn their gold in to get paper. The reason they have, according to our guest VJ, who was on the Smaulgld Subscriber Sound Off series 2 days ago, the reason Indians have the gold in the first place is because they don't trust the paper. So why would they turn their gold in for these rupee bonds? Okay, so there's a few stories here. I'm not going to go through them, but this little cluster here has some good stories on Indian gold. Indian man stole 200,000 worth of gold from a mine site. Gold shines on reducing India's demand for gold. The rate of tax on gold to determine the fate of the Indian gold trade, and digital gold sales picking up, according to a provider that makes an app that you can buy gold digitally. Silver nanowires made from silver are super stretchy. So another one of your things to add to 10,000 reasons why silver is the greatest metal on the face of the earth and destined to skyrocket. You now have nanowires going to be made of silver, super stretchy. Financial stuff, U.S. economic data, industrial production was pretty good, up 1%. Housing starts, however, were down. Housing permits also down. Notwithstanding that, the Atlanta Fed upped their GDP forecast for the second quarter up to 4.1% from 3.6%. And I believe the New York Fed also upped theirs to about 2.6, 2.8%. U.S. mint sales, not much to report. Very few sold again. We're now 2/3 of the way through May, and month to date, 1.5 million American Silver Eagles sold and just 5,500 Gold Eagles sold. I think there's one more report later in the week, but I think they only sold 500 more Gold Eagles. So they're at 6,000 for the week, and for the month. So gold sales horrendous, silver sales actually not bad, 1.5 million. We might get to 2 million this month, which is a pretty good month, not compared to recent years, but still 2 million a month will give you 24 million, but it's far below the 35 to 47 million we've grown accustomed to in annual American Silver Eagle sales. You can buy your junk silver, you can buy your American Gold Eagles. Gold Eagles, a lot of people say, well, I'd rather have more silver than gold. But you can buy small gold. They say gold's too expensive. These little ones, I think they're 1/10 ounce. They cost about $140, $150. So it's not that it's too expensive. You just don't get much. You get a very small piece of gold. But as someone pointed out, you put that in your pocket and walk away without even knowing you have it. Whereas if you had, you know, $150 worth of silver, would be slightly clunky. So anyway, that's an option. The smaller gold, they do sell them in 1/10, 1/4, 1/2, and 1 ounce size is the gold eagles. Unfortunately, they don't sell the gold buffaloes that way. They only sell them in the 1 ounce size. And there's your, this year, the effigy mounds and the Franklin Douglas, Frederick Douglass, America the Beautiful coins, very low mintages so far, just both about 20,000. Here's your pitch to donate to small. It's interesting here. I saw this note keeps coming up on my Bitcoin pitch for donations. Coinbase is saying, warning, due to extreme network congestion, we recommend using a higher fee. So they don't like the fact that I'm not asking for more than, I don't know what 0.0250 Bitcoin is. Maybe it's $10 or something. They want me to ask for more. So feel free to help out Coinbase's network congestion and give more than the 0.250 Bitcoin. A lot of people, you know, I got Bitcoin a few months back, a few donations, and since the price started going up, no one wants to part with it. So that highlights the hoarding aspect of Bitcoin. Take dollars, though, if you'd like. All right. Deutsche Bank woes deep in a Montepaschi fraud case. This was the thing where Deutsche Bank is being accused of running a international criminal organization. And that's because apparently they helped this Italian bank hide their losses. Deutsche Bank is not a lot of people's favorite banks, nor HSBC or JP Morgan. They seem to be involved in a lot of activities that you would not think are on the up and up. And this article, I think it was in Bloomberg, so it's not just some alternative media article. It's basically, they highlighted that that's what they're charging them with, is running an international criminal organization. We did a quick YouTube on why do bullion dealers trash numismatics. We had some good discussion. I think the video didn't really outline the points as well as I could have, because when I talk about numismatics, I'm not talking about semi-numismatics or, you know, a Canadian maple leaf with a little mark on it or something like that. I'm talking about collectible coins in very, very good condition, where they have the slab and they're rated 69 or 70 and they're key or rare dates. Those coins have done very well over the past few years, and unlike the prices of the bullion, because I was looking at some of the prices of those types of coins, you know, US minted, maybe say a 1921 Mercury dime or a key date, Carson City, Morgan dollar in tremendous condition. Those coins have retained their value, even though the price of the bullion has gone down. Now, if you have semi-numismatics, you're only going to get the bullion value of those anyway, so they're not worth it. Although the America the Beautiful coins, which I would consider semi-numismatic, just because they don't make that many of them, you know, the volcano one, I think that one you could have picked up for about $120, $130 at the time. That one sells on AppMex and other places for about $350. So the silver value isn't worth that much. The silver value is still worth just about $100. It's 5 ounces of silver, but the price of that coin has gone up. Excuse me. We also had two more in our series of the Small Globe subscribers sound off series. We had Hoshea Greenfield. He was talking about stagflation. I don't have it on here, but I will add it. We also had VJ. He talked about attitudes towards gold and silver in India. He talked about Brexit. Very interesting interview as well. That one will be posted. It's also, you can see it. It's on the YouTube channel. De-dollarization. Again, not just Belt and Road, but the AIIB. Argentina is going to join it. Another story here you can click on. Sri Lanka charges ahead. Also, they're part of the Belt and Road Initiative. Interesting story. Commerce Bank to close precious metals business, according to source. Now, something we talk about all the time. The price of gold and silver is not driven by demand in Asia or China or India. It is driven by the paper contracts and the sentiment of the traders. And when the price drops, according to the sentiment of traders, physical buying increases in China and India. But that physical buying doesn't drive the price up. In fact, When the price rises, that's when China and India slow their purchases. So we're having that right now. We were seeing surging demand because the price had dropped for the last few weeks. And now the price is up and the Indians and the Chinese kind of pulled back a bit. Interesting story here in Nevada. Nevada is known as the silver state. However, gold production in the state is increasing rapidly and the silver production isn't. I think gold production, if you click on that link from U.S. News and World Report, interesting place to read about gold and silver. Gold production is almost equivalent in ounces, I believe, to silver in the silver state of Nevada. So check out that story, link on the Smaulgld site. Another story, nanophysics, saving energy with a spot of silver. Add that to 20,001 reasons to love silver. Bullard coming out now. He's the guy who talks out of three sides of his mouth. Now he's saying, oh, we don't need to have all these interest rate hikes. But then he says maybe we should shrink our balance sheet. And then he says, oh, we don't need a rate hike in June. Who knows? As I've said all along, the Fed raises rates, has raised rates for the last few years, solely, in my opinion, to kind of create the concept that the Fed is semi-prudent. They're not like the other central banks who don't raise rates, have zero interest rates, who are conducting QE. And in this way, they may continue to make the treasuries attractive. And we're seeing that, you put treasuries on sale by giving a rate of interest, then countries will buy them. And I think that's what's happening. That's one of the reasons that but central banks are rebuilding their reserves and buying treasuries. Because why not buy the U.S. Treasury instead of any other treasury? Because most of the countries don't pay any interest. The U.S. pays interest. Also, as I see the dollar index fall, the Fed may be forced to do another rate hike just to make sure that the dollar doesn't fall much further. Although Trump probably wants the dollar to fall further. So we'll see what happens, but I wouldn't expect, they're not going to do the 4 rate hikes they promised, just like last year they promised. They might do one more, but they're not opposed to doing them, but they're clearly not going to be ratcheting rates higher and higher. The economy doesn't warrant it, and that's just talk. If they can get the benefit from talking, that's what they're going to do. Why raise the rates if you can just talk about it and you get the same benefit? Now, let's talk about Russia. Russia holdings of U.S. Treasuries surged to 28-month high. Now, maybe I'll open this one up and show you. The Russian Treasury position, used to be higher a few years back, and then when sanctions hit, there was no need to hold treasuries. Why? They didn't have the need to. They weren't allowed to trade with a lot of the countries, so they didn't need dollars. They didn't need dollar-denominated debt, so they sold a lot of them. And it was probably also a bit of retaliation, but they didn't sell all of them. However, in the past few months, they've ratcheted up their overall reserves. They continue to add gold. Gold is now 17% of their overall reserves, and they're pulling up their number of treasuries. Let's see if we get a chart here on the treasury holdings of Russia. That's a central bank of Russia, supposedly the picture of it, but the reserves are all at the bottom here. There's their gold reserve. You can check this out. This has already been published. There's a blog post and there's a YouTube on it. But the gold, the treasury, there you go, boom. There's they almost have $100 billion worth of treasuries. This is March, and I expect in April it to go even higher. They were in the 60, 70, 80 range a while back, and they now have more treasuries than they've had ever since November of 2014. So something significant is afoot. Russia is rebuilding its reserves and using gold and treasuries to do it. Now, one of the reasons I think Russia doesn't need even more gold is they buy basically almost their entire domestic mining production. If they had to buy more, then they'd probably influence the price. So why should they pay more? They might as well pay the good price, the current price, based on their domestic gold supply, rather than trying to get more gold in the market and potentially boosting the price. So that leaves them with the other option of adding U.S. Treasuries. And, they pay interest. The U.S. hasn't defaulted on the interest payments, so it makes sense for central banks, in my opinion, and their opinion as well, to hold treasuries in a fiat system, because what other treasuries are you going to buy? They don't pay interest. Now here we get to Fed President John Williams. This guy's popping off at a high school in San Francisco. I was unable to get the transcript or recording, but I put together bits and pieces of what this guy said. This is the guy who's been talking about 4 or 5 rate hikes a year for the past 3 years. Never happens. So he's speak excuse me, he speak to these high school students, and one thing he says is a dollar is still global king. Gold is irrelevant to monetary policy. I don't know if that was in response to a question, because generally I've looked at the Fed speeches. I've done word searches for years. They don't mention gold unless somebody asks them about it. I mean, they're trying to downplay gold. So no surprise that this guy is saying that gold is irrelevant. But I don't even, I'd like to find out. I'll try to find out for you whether he threw this in on his own or whether he was asked about it. But he also then took a swipe at the EU, saying that the euro had its own issues. So basically, he's saying it's between the dollar and the euro, and don't even think about that gold stuff. Then he also said the economy is doing well, and then he threw out that the economy, kind of a swipe at Donald Trump, he says we're going to be a service economy even more, not manufacturing. There's this idea that somehow we need to get the jobs back to manufacturing. He said that's not true. We excel in healthcare services, and I don't know what else he said, but he's basically saying we're a service economy, manufacturing we don't need. And then he also said in another article, so this, I had a piece there, this is a Wall Street Journal, this is the Reuters, and this one is Market Watch. He said without credit a modern economy doesn't work. And I guess that's true. The way our current modern economy works, it is credit-based, credit-driven, no doubt. Now, just another point. People constantly say that at some point we have to have a reset. And when that reset happens, in order to gain confidence in the system, we're going to have to go back to a gold or silver-based system. Nonsense. Think about Mark Dice videos. He tries to give away a 10-ounce silver bar or a chocolate bar, and people take the chocolate bar. He tries to sell a gold ounce, gold eagle, for like $50, and no one wants it. How is that gold or silver, which no one even knows what it is, going to give people confidence? So again, I just throw this out there because people accept this fact. When some commentator says the monetary system is going to have to be backed by gold, we're going to have to return to gold, confidence is going to be lost when we do QE 5 or 6. So say you. Maybe it is, but it's not a given that the world is going to, like Mike Maloney says, it always returns to gold. Maybe it doesn't. So just throwing it out there that you hear these things, you insist on them, you hear them, you repeat them. It sounds logical, but maybe just think of Mark Dice out there standing there trying to give away this supposedly most valuable thing on earth with the 20,000 uses, silver, and the most confidence building metal, gold on earth, and no one wants it. So just keep that in mind when you insist, or you hear people insist, that the monetary system must return to gold and silver. The people in charge right now, they don't think that, and the people not in charge don't even know about it. Bitcoin, finally, last point. There was a story, you can read it here, it was in the Wall Street Journal. Bitcoin COMEX futures coming. Well, that would be the end of Bitcoin. You would naked short it, and it would be, quote, game over for price appreciation if the COMEX ever got a hold of Bitcoin. You can read that. The reason they think that is because they set up an index, and, the IRS declared Bitcoin a commodity. No surprise there. It really isn't a commodity, but if they want to make it a commodity, well then, it's subject to commodity rules, and if it's a commodity, let's get it on a COMEX and let the naked shorts begin, I guess, is their thought. Because if Bitcoin does continue to take off, it will be viewed as an alternative to the dollar, and that is not what they want. And they want to show that there's no confidence in Bitcoin. They do not want it to be rising the way it is rising. They've let it go for this long. So we'll see. If they decide to make a Bitcoin COMEX futures. I don't think anybody would welcome that, but of course they would give you all kinds of wonderful reasons. Pull down the volatility. Remember, that's what they said for the gold futures exchanges, and that's exactly what happened. It stopped people hoarding gold, it reduced the physical demand for gold, and it basically puts a cap or controls the price rise in gold and silver. Thanks for listening.